All right, hello, everyone. Happy Thursday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Lots to talk about, David. Lots happening in the market. So let's just get right into it. Our topic today is earnings mania, and that's really what we're in the thick of now, these Mag 7 earnings. So let's talk about what we've gotten so far. Meta and Microsoft reported after the market closed on Wednesday, yesterday, beating expectations on both the top and bottom line for both of those companies. The big woohoo of the night was Meta hiking their capex forecast for the year, for the full fiscal year, expecting 64 billion to 72 billion, much better than the 59 about billion that analysts were expecting. That sent some nice boost to Nvidia, other AI names, as Meta is still spending in the AI space. All right. So what is your reaction to last night's earnings? How have you played them since? And what does it tell you about the Mag 7? And then we'll talk about what's coming up later tonight after.
Bonafide tells me that tariffs are a real concern for weeks, and yet it doesn't play out as badly as many had feared in their forward guidance. Bottom line, so many were concerned this was going to be a really rough quarter. We see Meta literally talk about less spending from Chinese companies, and yet they didn't really lower guidance. They gave a range, but in essence, their business is holding up just fine, and there's plenty of advertising business to go around. And when it comes to Microsoft, it's been completely de-risked after 3 really subpar quarters, and concerns about their growth engine Azure, like, unfounded, right? Like, it turns out they're back to growth and they're in good shape, and they gave excellent guidance. So you have one stock in Microsoft where it's been de-risked for months. It started going lower way before the market did. So it was a perfect setup. Besides bouncing 40 or 50 pre the print off lows of early April, it still was not a, let's say, crowded trade. And then Meta not only talked about ad rates being okay and not taking earnings down, but they're able to then talk about raising the spend, right, on CapEx, and provide a wonderful backdrop to a million other companies that typically aren't related to these two, that aren't software or ad related, but are about hardware and spend. So, CoreWeave and Nvidia go blockbuster today, go bonkers today, I should say. So it was kind of the perfect situation, right? They reported stocks came in, lots of fear about guiding down. Neither company takes guidance down. They talk about greater spend, which puts the AI trade back in focus for many. And so many were sure that, spending was going to be curtailed. And these stocks, the NVIDIAs, the MBISs, all the power, guys that were just, done. Turns out life's, not so different than it was a couple of months ago, even with tariffs changing business a bit. So it was really solid.
Yeah. So the earnings that we're getting tonight, the next group of the big Mag 7 earnings are Apple and Amazon. Here's a look at the expectations. They're expected, to report weaker results than the last quarter. Apple and Amazon are arguably much more exposed to tariffs than Meta and Microsoft. I mean, Apple is a hardware business. Amazon is a retail business, of course, now a cloud business and so many other things as well. But, retail hardware definitely impacted by tariffs more than Meta and Microsoft.
And beyond
what are your thoughts headed into this reports with that backdrop?
There's a slowing, right, in the economy. I mean, you can see it in many different areas. So whether it be spending by people, there are a million reasons why, besides the fact that Amazon's cheaper than it's ever been, right? Its valuation is just dirt cheap. It's never been here. It's always been an expensive equity. I've always said part of that is also it's a more mature company. And sometimes as you mature more, you become a more fairly valued company. It's not always when you're supposed to buy the stock. Sometimes that just means the best is it. I'm not saying it is, but we've seen that before. Anyway, my point is Amazon, I'm a huge fan, but I don't like the setup. Like, it's gapping up today because of Microsoft and Meta. So I'm just neutral. I wouldn't bet against it. I wouldn't buy puts. I'm not long it, but it's certainly, I don't like the setup to buy calls. Apple, I don't like it all. Trades at a premium multiple with no growth, has some serious issues in terms of tariffs. And prior to all this tariff stuff, I get it. It's a huge cash flowing company that has a great management team, maybe not a great innovative team without jobs, but bottom line, it's an expensive company for a company that has no growth. And I'm not particularly smart, but that guy Buffett is, and it's probably a reason why he sold so much stock. So that I don't even look at it, don't care. I trade it on the edges when it gets oversold and bought. And not always well, actually. It used to be well. My last trade in it wasn't particularly great a couple months ago. But bottom line, I'm not a fan here of Apple. Amazon, I'm a long-term fan. How I played them, just to sum this up, is I think this is an amazing market. I was just talking to my buddy Zah, and he's like, yeah, Nasdaq's up like 21% in weeks off the bottom. So although earnings are wonderful and they give us more context on how far the market might go, or how far it might pull back when it pulls back, it's not creating the alpha. The alpha is being created by those moments in time where stocks should be bought. And sometimes that has zero to do with earnings. So let me give you an example. When Meta was down to 510, 500, 480, I was buying Meta. I was doing it through METU. I didn't buy the low. I think I traded 19, but I bought plenty at 21, 22. It's trading 29 today. I held some for earnings because I'm up enough and I had a cushion, and I really believe it's actually a fair multiple. So if they lowered guidance, so what? It'll go back to where I own it. Same thing with like the stocks. It started to just be too cheap. So I focused on it at 7 or 8. Yesterday, we first got a pullback because that moved down in the market. And I said, you know what? It's cheap in the 10s. So I'm going to buy the SOX versus SOXL. Well, the market helped SOXL gap up. I mean, it's an ultra, so it gapped like 18% from that buy yesterday. Am I excited to buy the SOX today because the earnings backdrop is better? No. So what I'm doing is still buying stocks ahead of earnings that I think give a good risk reward profile, and then let earnings tell me how bullish to be or bearish to be. You know what I mean? And adjust my price targets accordingly. That's how I'm playing things. But I'm not getting too crazy on playing earnings because some of these stocks just had 20% moves off the lows. So even if they're good earnings, I don't know if they're going to work. So I've hood from the 32s. I said into last night's print, there's no shot in hell I'm selling my stock. There's also no shot in hell I'm buying more or buying calls because I think it's a seller's print, because I don't think they can blow you away enough after bouncing stock about 65% off lows. So yeah, like they're going to have to say something unbelievable to go higher. So earnings, although important, will give you some context on where to trim, buy more, sell. But I don't know if a lot of these setups are great to play for the setup itself. And that's how I'm playing it.
Yeah. As you've said to me many times, it's all about where the stock is into the print, when it's done, headed into earnings. All right, let's talk about yesterday. This is a screenshot from the chat. I see I had a great day today. Don't want to overtrade rest of the day. Hell of a start to the day. Made an absolute killing on your QQQ puts. Taking the kids on a Disney cruise paid for by Inner Circle. Some of the highlights there from that. The Inner Circle went home long. The May 1 475 puts on the Qs on Tuesday. You were feeling bearish, the environment, and wanted to be short. It wasn't just the Inner Circle that got that trade. So did Epic Trades, your options trading newsletter. You can see bought those around 450, and then of course yesterday the drop in the morning gave a great sell on those.
So I wanted to say something. I really thought about this trade, and it's so specific to the market. Here's what I mean by that. I'm like, wow, we have earnings later.
What were you?
Well, I thought it has to be today because earnings will determine the rest. It'll be out of my hands.
Right. Yeah,
but
true.
We are so far into this rally in front of earnings. I probably got to do this right now, or I'm stuck playing any downside via what we get from earnings. So it has to be into this move, into what we perceived as resistance, and take a shot. And at least before earnings, maybe we'll get that move. Luckily enough, we got it. What I wanted to mention is the fact that the Qs could go down 12 yesterday, then basically go green. You don't really have to think about earnings too much. You have to buy quality stocks when no one wants them. Like we were just chatting. I was chatting with a bunch of people from Inner Circle. I bought the Qs via TQQ. I bought the Qs last Monday, not this past Monday, Monday before, at $430. That's insane. That's like dumb. So I think people have to take, here's earnings. These are the stocks I want to buy. There'll be a moment again where everyone throws them out the window and doesn't like them because Trump picks a fight with someone or something happens. And now you know your favorites and specials, but like I'm not like, oh, Microsoft was great, so I'm buying it up 30. I don't think that's a really great way to handle earnings season. And the fact that you can kind of put in these cute shorts and get paid. I mean, that was a crazy move down yesterday morning, and then it was a crazy reversal. But what it's told me is maybe if we do get a pullback, if tariffs take longer than expected, if China, continues to say we actually don't speak to them, even though every day we say we do talk to them, all that funny stuff continues to happen. Maybe the Qs pull back to 450 and not 405. So we have to adjust because earnings season is going much better than feared.
I mean, you went home those long those puts Tuesday, and then you got the SMCI news, which was a nice help. The preprint, and then of course you can't predict what economic data comes out the next morning, but yesterday morning's economic data definitely helped out. We're looking at a slowing economy with sticky inflation, US GDP contracting 0.3% in the first quarter versus growth of 0.4% that was forecast. And then that PCE price index came in, I think, lower than expected, but still, year over year, 2.3% on the headline, 2.6% on the core. We're definitely not at the Fed's target and not really moving much toward the Fed's target. What's your opinion on the economy here?
In a weird way, it's all the right news to make the market go higher. Because what we're finding out is the best in breed companies in a slowing environment are still performing, and tariffs aren't just decimating their forward business. Yet things are slowing down a great deal, right? And by the way, that's evidenced by the lack of the move in things like small caps, right? As the Qs have this crazy range, they can't even get off their butt. They trade horrific. So I think what's happening is you get those people who are like, well, maybe we are getting closer to rate cuts. We're not going to get them that quickly, but at least maybe there's some evidence to push them forward, and companies could still earn money. So for the last 48 hours or so, it's been the perfect dynamic of news. I wouldn't have said that till I found out that, companies are still operating profitably, able to increase spend like Meta and not disappoint people, and the economy slows down enough. So yeah, there are going to be companies that suffer, and people are going to not be too excited about trying to catch the bottom in small caps. But overall, you get, closer to rate cuts, economy slowing, but some of these larger companies that make up so much of the indices, they still operate well. So it's just kind of a perfect storm for now. Then you got that article, that wherever that article came from yesterday about we are talking to China. I don't even care anymore. I'm so sick of the back and forth.
Yeah, we've been very much in a good news is like extra good news, and bad news is kind of meh to the market reaction at this point. But maybe we're back to bad news might be good news because it gives the Fed room to cut. Our next
yesterday I said bad news is bad. I was like, these numbers that like the Fed's not just going to move, right? Mm-hmm. But now if we start to see, remember, jobs are so much a part of things. I believe it's the first of the month today, which means tomorrow's the NFP.
Yeah. That's what's on the screen. Jobs report tomorrow.
Right. So like all of a sudden, maybe, earnings season isn't so bad. Like job losses are severe, and they actually might have to pivot and be a lot more dovish than thought. So could work out in the market's favor. In the meantime, we just bounced like, the market's trading like a meme stock. So you have to be careful chasing highs, but hell of a move.
Yeah. So the jobs report is tomorrow morning. Here's the numbers: 133,000 expected. That's down from 228,000 in March. So that'd be a much weaker growth in the labor market. Of course, private payrolls missed yesterday, 62,000 versus 120,000. I expect that was a big miss. But the private payrolls doesn't always translate to the NFP.
Sometimes it has no relationship.
Sometimes it doesn't. So we'll see. But this, I think, This is going to be our first jobs report with a pretty good look at some of the government layoffs, which is a big part of the NFP. So that'll be interesting. And then this morning, we saw weekly jobless claims up more than expected, 241,000 versus that 225,000 expected. You really kind of already went through it on what the market's looking for, but the market is hoping for some Fed rate cuts. And if we can see that weakening in the labor market, that could help.
We're at that point.
Fed meets next week.
We're at that point, though, where bad is too bad. So just
right. We need
it's not that game of it's so bad they're just going to move. No, if all of a sudden the jobs market's just imploding, people are not going to be like, oh, they're cutting rates. They're going to say, oh my God, this is going to filter down into earnings, and outside of maybe Meta and Microsoft, you don't want to own most of these companies because their earnings will go south. So there's a fine line. You don't want to see it implode.
Yeah, definitely. We need maybe a little weakness, but not no implosion happening in the labor market. All right, a little bit of a funny thing to get your opinion on here. Is this Trump's market or is this Biden's market? Last January to 2024, when Trump was running, he declared it the Trump stock market because the polls were showing he was going to win, so investors were excited about it. So during Biden's term, it was Trump's market. And then yesterday he posted, it's Biden's stock market, not Trump's. I didn't take over until January 20th. So during Trump's term, it's still Biden's market. Obviously, it's a little bit funny here, but the market has definitely been reacting 100% to the first 100 days of Trump's administration. And so far, the market has been not so excited about things that are happening.
Except by the end of April, it was almost all for naught, right?
Yeah, true.
Out of fairness.
Yeah.
I want to mention one thing. I think it's blatantly obvious, but to the few people, maybe it's not. It's been kind of, a lot of people get like, how do you say this? Because we were down. But we made up all those gains because I think it almost created the ultimate, like the best wall. I'm in the business nearly 30 years. It's been the ultimate wall of worry. And it's almost like you don't pay attention to fundamentals because you're just paying attention to headlines. And did they talk to China? Did they not? Is it going to take 2 years, or could there be a deal? Or maybe it's India. And it's no longer, hey, is the semiconductor complex slowing as a whole? And are they about to have down earnings for 25 and 26? Or, is spending going to be less? And it turns out AI was a bubble. I don't think it was. But my point is, people ask those questions less. And it was simply jockeying every day on the news. So that's kind of bullish for stocks eventually, because everyone that wanted to sell, they probably sold, right? We went down in a straight line to at least 405 Qs, 5,000 SPX. So when that happens, everyone that wanted to sell sells. Everyone's jockeying. There's less selling pressure. And you don't really think about good news, bad news, because everyone's jockeying on headlines, which almost creates, here's how I liken it, because this is something I learned way too late, but many years ago. Some of the best valuations you get in biotech and even new technology or early on, way before there's revenue. The minute you can quantify revenue and you have numbers to create a valuation on, very often you never seen the same high again because people are like, oh, I can't believe it. I can't believe Lucid traded at an $80 billion valuation, because they have to sell cars, and a lot of them, to ever make that make sense. So it's the concept when you can't actually quantify the numbers. The minute you can be like, oh, so they're buying Lucid and here's the valuation. I'm just throwing Lucid as an example, but you could use any biotech. In a way, that's what just happened with the market. We weren't really even thinking about valuation anymore. We're thinking Trump's talking to China. He's not talking to China. Oh my God, we're going to have a deal with India. Can't get short because shorts are going to get creamed. And that actually creates like a perfect backdrop to just climb the wall of worry. Sorry to digress, but that's what I've been thinking about for a couple of weeks, which is why I kept buying dips. When I was buying the Qs, I wasn't thinking about valuation. I was just thinking about no one wants them. Everyone's sold. Anytime there's a headline, it's going to pop, and you just adapt to the climate. That's been the climate.
All right. Are you a bull or a bear here? And what are the setups that you like personally?
I am so not avoiding this question. I am an opportunist. So what I care about is making money, and especially the people that follow me making money. So I'm like, the semis are cheap here. How can I best play it and make 2 and 2 equal maybe 8 or 10, not 4? Okay, that's probably stock sell as long as I don't think I'm going to have to sit on it for months at a time. So after trading near 13 and the stocks, having a rally to yesterday when it pulls back, what a perfect time to put some risk on again. And now it's higher. That's what I'm doing. Meta's earnings, pretty darn solid. I don't like the way the stock's trading, but I like the valuation and I like the outlook. So if it pulls back enough, I'll be bullish on Meta. Now, it's probably going to be closer to 550, 560 the way the stock's trade. In terms of the indices, I can see the Qs testing the 200-day and then getting rejected and pulling back. If I had to buy the indices now and someone put a gun to my head, I'd be more bearish than bullish, but I'm levered long. Like the only short I have right now is I bought puts on Netflix today because I was like, this is the dumbest move. It's up 11 days in a row or something. So I bought a bunch of puts when it was over 1140. But anyway, my point is, so I'm more bearish than bullish, but I will take what I can get out of the long side, right? So I will continue to buy dips. And when the market's ready to correct, and I think I can capitalize on it, just like Tuesday, I mean, those Q puts, 575s. I bought some at the end of the day as low as 420. I didn't sell the top. I sold like 10. But they went to 13 yesterday. So there's enough volatility. I don't have to be bearish or bullish. I have to capitalize on amazing opportunities when they happen, and it makes your year or week or month. That's how I'm looking at it. I don't have to be macro, because if I was, I never would have guessed these companies could prosper in this environment as well as they are. And honestly, I would have guessed we never would get over the 50-day. And here we are with the Qs flying over the 50-day. So I'm more an opportunist, where I think there is more downside than upside over the next month in the indices. And as soon as they go down, I'm sure I'll be buying.
All right. An opportunist, David Prince, in the market in 2025. All right. If you want David's free newsletter, you can go to t3live.com/DP. It's a weekly newsletter we send out on Tuesday mornings, giving you a
just say one thing
of his morning call. Yeah.
Like, who cares if you're a bear or bull? Because if you bought the Qs last week with me, you don't give an F. Like, who the hell cares? And if you bought TQQ with me at 36 4 weeks ago, you don't care. So all you care about is, where's your risk reward? Well, the Qs are now at 482. Do I want to be levered long the Qs to make the next 8 points when we were 463 yesterday? Probably not. So I'm looking underneath the hood. Like, speaking of hood, Robinhood pulls back enough. There's an individual idea, 43, 44. I'd love to add risk back on. So with this type of volatility, I say take advantage of it and don't worry about whether you're bullish or bearish, because it's probably not the time to figure that out. It's probably the time to figure out, what are my favorite stocks with the best risk reward setups for the next week, the next month, and the next year.
Yep. Price rules. Doesn't matter if you're a bull or a bear. The price of the individual equities in the market rules. All right. Again, David's free newsletter. You can go to t3live.com/DP. We send this out on Tuesday mornings. It's a breakdown of his morning call that he gives inside the inner circle. Get his levels and his insight for the market that day totally for free. So again, you go to t3live.com/DP for that. David, good luck with tonight's earnings.
Thank you.
You can trade them well. Hope there's a good setup for you off of them. And we'll talk next week.
Oh, we did that with Microsoft last night, by the way.
I know. I was listening.
I don't know if you saw it. We did. I wish I held some, but I made $4 or $5. I just missed the next 10.
Thanks.
All right. See you next week.
Have a good day.
Bye.